All right, good afternoon, everybody. Today is Wednesday, the 27th of April, and we're live here. The market obviously continued to move higher here on this weekly chart. We can see that the S&P 500 has broken out, and looking for the next potential upside objective, we would look to the left, and we can see that where we currently are right now at 135.70. It looks like maybe we're headed up towards somewhere in this level. That is either these lows right here from late 2007 near about 140, 40 and a half or so, or up to the highs from 2008 near 144. So the path of least resistance is higher, and it's been a bumpy ride, but still, a nice ride when we get these these moves that show some real strong momentum that continues for days at a time. So this market really began this leg higher when Intel reported earnings and the market gapped up. And it's funny that just about everyone that I saw on Twitter and that was kind of laughing at Intel, saying Intel's gonna, they rarely hold on to their earnings gap and that sort of thing. But you have to be impressed with the strength of Intel and its ability to break out here. We've got a lot of stocks obviously at all-time highs. IBM, we saw today that Amazon powered higher after yesterday. If you look at, we'll take a look. Let me change the settings in here. We can take a look at. Let's see, include pre and post market for Amazon yesterday in the after hours. It traded down as low as 166, and a lot of people were kind of freaked out that Amazon was going to put pressure on this market today. But really, just a huge recovery in Amazon. Last night, also Acme Packet, which has been a super strong stock. Looking at the monthly and weekly charts, you can see here that Acme Packet sold off and traded down to 69 bucks a share after kind of people kind of panicked in there. And anyways, here it is up at 83 bucks a share. So we've got the Fed, we've got earnings, we've got Middle East maybe settling down, who knows? But the path of least resistance continues to be higher, and if you stay focused on price action, then all those headlines really don't amount to more than a lot of noise, really. So looking at the S&P 500, we continue to grind higher. That prior levels of support resistance rather holding as support, and now we're going to want to see that the 135 level in the SPY holds as support here in the next couple days. And obviously, the big level on the daily time frame, we've got that inverted head and shoulders pattern, which has completed by breaking past the neckline. So that's going to be the bigger level for this market to hold near 134 the next couple weeks. But tomorrow, let's keep an eye on 135, and then below that about 134.50, basically the lows of today and yesterday's midday low as well. So if you look at the height of the pattern added to the breakout point, that's where we would come up with a target that you could call the neckline. Let's just call it 134, and we'll go down here to about 126. So we'll say the height of this pattern measured loosely is about 8 points. So add that to 134 and you get 142, which puts us within those levels that we were talking about on the on this weekly chart. So it continues to be a market that's controlled by buyers, higher highs and higher lows. Obviously, you just want to continue to stay focused for new purchases on buying stocks which aren't too far extended. And we're seeing, each day that there are stocks that are being presented to us that do give us that opportunity. The NASDAQ, for its part, also out at new highs here as well, convincingly today after kind of breaking that level yesterday. But the weekly chart, very bullish looking. You take a look at the monthly chart and where we are, and you kind of gotta back this up and kind of change the scaling to really get a good handle on it. And in fact, we should probably be looking at the CompX, the Nasdaq composite, because we've for a while this 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 hadn't broken out, but now we see that that the composite has also broken out in here as well. So we overtook these highs of 28.61 today with this advance higher, and that's at now a high not seen since well, going back to 2001. So levels in here we might be looking at 28.92 or so for where there's the potential for sellers to come into the market. Not necessarily that there's been a prior big support level there, but that would become resistance. But it's just a level that it shows up on the chart, and that's where we're looking at. We are following 12:05 a.m. UAE time. Mazrui, I don't know what that means. Maybe it means you're live in the United Arab Emirates. Well, thank you for joining. If that's if I understand your tweet right. But anyways, but going back to it, it's you just have to look at it as it's bullish. It's higher highs and higher lows, and you want to obviously not chase the stocks as I just said that have already moved, but instead focus on where are the lower risk opportunities. And even there, I mean, you can still obviously trade these these stocks that have had huge runs like SIFI, but and REDF, but they're are they the lowest risk stocks in the market right now? When they get this extended, I don't think so. But if you're skilled enough and you're able to watch it, you have the time to sit and watch it on the 1 minute charts and the 2 minute charts and that sort of thing. And if you're mindful of buying at places where you can put a stop close by, then these stocks still make sense. So even with stocks that have had big runs, if you're skilled enough and disciplined and you have the time and energy and patience, then they are still viable trading candidates. Russell 2000 close to its all-time high here as well. I guess on a closing basis, this probably is the high close. Let's take a look at that. It might have closed higher on this day. This close was I can't read that shade of green. I don't know how to change it. 85.38. So it looks like we're at an all-time closing high in here as well, and just what can it's hard to be bearish when markets are making multi-year highs. So the Russell 2000, again, we want to do the same thing, which is innocent till proven guilty, and manage risk. That's our job, is to manage risk. If we break back below probably 84.90 in the Russell 2000, then you want to get a little bit more defensive. The bigger level is what we've been talking about, is this 83 level. We had a little battle there last week, but it again it found support at that rising 50-day moving average, and continues to show these higher highs and higher lows above the 5-day moving average here on an intraday time frame. And back to the semiconductors again, this group has really been what was the catalyst for this market to move higher after those couple of shakeouts, and the group was looking kind of sketchy over here after these these moves lower, and then the subsequent gap which failed, but this gap obviously is held, and semiconductors are now at multi-year highs as well. If we draw a horizontal line, we can see we're up the next potential level could be up near 39 to 40 bucks in the semiconductors. So go with the flow. The financials, I've been saying it for a while. I think they're a complete waste of time. A lot of people are seeing that this looks like a bear flag, and great. It's not going to mean anything really till it gets below 1580. Don't waste your time on the financials. Obviously, we've got a big bull market that isn't requiring the participation of the financials. So again, I think they're a waste of time. Silver, huge uptrend still continues. You can see here on this is a closing high for the actual physical metal, and intraday we've got this market still looking higher. So Jim Cramer was saying the other day that he thought it was going to continue. You could still buy it here. I think it's a little extended to be buying it, but obviously there's still some good trades in there, and I think that the caveat for new purchases in here is you have to look at the daily time frame and see how in the weekly charts and see how big this run has been, and that that there's the possibility that you're getting in a little bit late here maybe, and if you can manage risk, then there's nothing wrong with buying any of these things. The one thing with this silver that continues to amaze me is the number of people that try to pick a bottom, or I'm sorry, pick a top in silver by purchasing the double short silver ETF, which is ZSL, and what's that, AGQ, I think, is the triple long. I mean, this thing was up 40 points or something today. AGQ, I think, up $43. So just some massive moves out there. There's a lot of opportunity in this market, but don't allow your confidence to exceed your skill, or the failure to recognize the environment we're in, which is very forgiving of mistakes, and easier to make money. So it's easy to get a big head and think you've got everything right. Now's the time you want to be, spending more time, remembering, not more time, but it's just as important, that is risk management, as ever. You don't want to get cocky and be chasing stocks that have already run, and and loading the boat, thinking that you can do nothing wrong in this market, because when that happens, that's when, for me at least, when big losses are soon on the horizon, basically, when I start feeling that way. Anyways, let's take a look at some of the stocks. I had this video up on my site last night that mentioned these stocks, so I'm going to talk about, the biotechs have been real strong. So Celgene was one that hadn't quite run yet, and today it gapped up a little bit, but it did make a nice little run after this consolidation. So Celgene's catching up to some of these other ones. Vertex we had spoken about the last couple weeks, but there was really a pretty nasty shakeout in there or actually I guess on Monday. They got news yesterday, and then what was that big one today? There was a REGN, big biotech mover. BIIB, another big biotech mover recently, and it's holding its gains. So, a lot of people are saying, hey, sell short BIIB. To me, that's, it's up a lot, but it's holding its gains. I don't think you really want to be doing that. But some of the other biotechs that look good include Dendreon, which is right now, at these levels of the last week and a half, that I think are pretty important. You look at that daily time frame, and breaking past 42 probably. I think that you're gonna see this. The Dendreon move up towards the highs. I guess I have earnings due on Monday, and that's important to know. I mean, I wouldn't hold it in front of the earnings. And in fact, yesterday one of my subscribers said that reminded me that the PPDI was due to report after the close yesterday. So I was long this stock, and I reluctantly sold it here at the end of the day. In here, or no, it was right at the end of the day, right on that little spike there at the end of the day. I wanted to hold it because I thought the daily chart was breaking out. The weekly chart really looks nice, but with earnings due out, I decided to sell it at the end of the day and really kind of dodged a bullet in there. So again, these biotechs, it's easy to look at the ones like REGN and BIIB and say, hey, they're going to be great after earnings, but and PPDI wasn't a disaster by any means, but it just kind of sucks to come in and get punched in the face being long a stock like this one. Anyways, Dendreon continues to look good. HGSI is another one that I'm in that looks like it should be able to continue to move higher. You look at the weekly chart here. It looks definitely like it's headed north of 30, and if it takes out this these highs near about 30.5 from last year, maybe it's good for another couple points in HGSI. Again, they're biotechs, they're riskier types of stocks, so you want to be mindful of your position size, but there's great opportunity in the group in particular right now. FTK is one of these stocks that's extended. We were looking for a move beyond some of the recent resistance here. That didn't occur. I think you keep this one on your watch list. It gets above about 975. It still looks like you might get the next leg higher. Again, though, when they get extended like this, you have to be aware of what's your worst case stop. In this one, I would say 920. But once it once and if it breaks that 975 level, it would hopefully have put in a higher low first, and maybe it runs up towards 960, pulls back to 945, and then runs up through, and you could put your stop down near 940 rather than down near 920. Another name that looked like it was going to be able to continue to move higher was his GAME, GAME. I was talking about $7.45. It did make a little move when it got above there today, but only got up to really, and this was what I was saying, is this is one of those tricky ones. Do you buy it above 945, or is it really going to have to clear these highs from last week near 955? So I still think that GAME is worth keeping an eye on. This is Shanda Games, and there's I don't know what happened to the chart over here. I have a feeling that there's something not accurate about my chart, but maybe that's the actual history of it. But GAME does trade traded 1 million shares today. I'd say if this thing can get through 755, then it's probably going to be able to run. We were looking at JRCC as a potential long trade today. Breaking past a little bit of this resistance. Well, if it doesn't break past the resistance and you have a weak stock first thing in the morning, there's no point in being involved and costing money. You don't want to get that opinion. They're just setups. You look at it the night before and you say, hey, if it runs up through 2280, then we could get long with a stop near 2240. But if it opens weaker the next day, then on to the next one, let it go. And this one doesn't look like it's likely to be a mover. I think you could probably set an alert on James River up near about 2280 just to get an anticipation on it. But anyways, Rubicon was another one we were looking at. There's a big short position in Rubicon, and we were talking about getting involved above this level with a stop here. Well, this is why you don't chase gaps. And in here, at 9:30, it had gapped up and kind of failed here pretty quickly. I mean, if you were paying attention, you might have actually bought it here. I wasn't paying attention to Rubicon, but you might have bought it right as it got back above that volume weighted average price. So it had that little shakeout, but then your stop, had you purchased it here at 29.40ish, I think your stop should have been about 29.25. So it shouldn't have been a bad loser if you had gotten involved. I forgot when they're due to report, but this one's looks like it's got some room to run. Who knows? Maybe up towards these highs over here. You can look at this weekly chart as a big giant cup and handle, I guess. But when you look at 3-year, 4-year cup and handle, I don't think the patterns really make as much sense, I guess, to follow. But Rubicon still, I'm still going to keep that one on the watch list. I've still got this Tesla that it just kind of grinds higher, which has been kind of disappointing. As I was pointing out last week, the volume weighted average price since this gap higher, we've surpassed that, and I was thinking that we would be able to get some nice volume and a nice push when it got above that level. And I'm just going to pull up the short interest on this too, because what I wanted to point out here was that in this was Tesla. If we take a look here at the NASDAQ site, and I like this because we get the history of the short position, which is nice. We can see here excuse me, that as of so the new data came out today. I hadn't realized that, but they increased their position as of April 15th, another 1.3 million shares. So from March 31st to April 15th, it went up another 1.3 million shares. But if you take a look since the beginning of the year, December 31st, it was 7.1. So they've doubled their short position since January. So if we take a look in here at the volume weighted average price since January, and just kind of take this line and draw it straight across here on this Realtek tool, you can see the volume weighted average price, and that line draws dynamically since the beginning of the year is about $25.09. So that means the shorts added about 7 million shares at an average, you could say, of about $25. Now you could break it down further, obviously, and you look at for instance, since March 31st, through February 15th that they added 1.3 million shares. So right in here, their average short position was put on at approximately $26.85. So these shorts, really look like they're fighting a what appears to be a losing battle. Maybe they know something, but it's the stock has been frustrating because it just kind of grinds. It has these little shoots higher, and then it just kind of grinds back and forth. It goes back and forth above and below that volume weighted average price for the day, and anyways, I've decided that the way to trade this one is just to own a little, own some small shares and give it a little bit of room. And I suppose at this point, my worst case stop would be down near about 26. Most likely I wouldn't hold it that far down, maybe towards about 26.50, 26.45 on that one. A nice mover today that I had tweeted was and was on the watch list last night on that video as well, was this Take-Two TTWO, and you can see on here the 10-minute time frame. The pressure had been building. We had these higher lows. We had a rising 5-day moving average, and I was saying it's another one of these tricky types of stocks. Do you buy it above 1580, or do you wait for the break past 16 on the daily time frame? I decided to buy it a little bit early. I think I bought it, when I mentioned it on Twitter, it was right around in this area here, and just a real nice move in there, and then it pulled back perfectly. So you want to sell anytime you get a quick move like this. You want to sell some strength. And as I told subscribers, I had bought some of the these calls at 50 cents right in here before right before it began to move, which was nice, and I got half of them off actually at 90 cents. So these are the June, or I'm sorry, the May 16 calls. So I've still got a half a position in there and a little bit of the stock, but the Take-Two pulled back almost perfectly to the volume weighted average price in here today. So it still behaves well. I think that if you're involved in this, I wouldn't give it beyond about 15.95 worst case for a stop. Maybe even tighten that up to about 16.02. But that one looks decent. The other some of the natural gas, what are they? Clean fuel here had a decent day. This was on the watch list last night as well, and and this was actually another one where I was saying, do we want to wait for a break past this level, or do we get a little cheat buy above yesterday afternoon's high? Unfortunately, I decided to buy some here, and that worked well. The other one in that group that it didn't do as well, but still has a nice looking chart in here, is this WPRT Westport. Actually, this is Westport. I owned it on this day, and I sold it in the pre-market this day at like 1965. Like one of the most retarded trades I've done this year, because it was really breaking a nice big level there on the weekly time frame as well. But anyways, the stock has consolidated above a rising 20-day moving average. It's making these higher lows above that rising 20-day moving average. You look at the 30-minute time frame, and here we see, what was it pointed out on the 10-minute time frame, is we've got it now above a rising 5-day moving average. We've got these higher lows, and it seems like you get it convincingly above the highs here of today, probably back above 26. That this is a stock that ought to, I think, make a nice quick run for 28 or so, and it'd be interesting to see what the new short position is in here, because that's available now. But so 3.1 million shares, not a big position, especially when you put it relative to the average daily volume of the last 30 days there. So so average daily volume has been 2.1 million shares. And let me take a look here on Twitter. It doesn't look like you guys have any questions, so that's cool. I'm done. Thanks for tuning in, and might talk to you on Friday. We'll see how I'm feeling.